For AM Best TV, I'm Diana Dorothy at the 16th Singapore International Reinsurance Conference. And joining me now is Greg Carter, Managing Director of Analytics for EMEA and Asia Pacific at AM Best. Greg, great to have you with us.
Thank you very much.
We're seeing a range of regulatory initiatives. How is that impacting credit quality across the region?
It's difficult to sum that up in a single sentence because we're seeing a number of different initiatives and a number of different stages of development for regulatory actions across the region. So some countries do already have risk-based capital regimes in place and they're looking to enhance those. Other territories are just at the stage of introducing risk-based capital for the first time. So the impact that's having on credit quality is that we're seeing balance sheet strength being generally improved for those companies as they go through that process, as it raises capital requirements, as it raises awareness of the risks that companies face. But that does bring certain costs and certain pressures on management in the short term, and that has a short-term negative impact on operating performance. But overall, we're seeing the benefits of risk-based capital improving companies' understanding of risk management. And so when we make our assessment of enterprise risk management, we're seeing a step up and gradual improvements in that area.
How do regulatory standards in Asia compare to that of Western Europe and other markets?
Well, Western Europe has long had a complex and well-developed regulatory regime, and the implementation of Solvency II a few years back now has raised that standard even further. So generally speaking, the markets across Asia, we would say, are still behind Solvency II, with one or two exceptions. Singapore is a very well-developed regulatory regime, for example. When you look at some of the other markets that we follow, particularly I think of the Middle East, there we see similar stages of development, major changes in risk-based capital requirements, new capital regimes coming into place, and those markets going through some of the typical growing pains of implementing those new regimes.
Finally, what's the latest thinking on IFRS 17?
Well, IFRS 17 has been coming for a long time. It's 20 years and counting, but it's definitely on its way. And the industry is now definitely gearing up for the implementation of IFRS 17. A lot of countries are going through a gap analysis of understanding where they have shortcomings in their current understandings, what they need to do to change their reporting requirements, reporting formats. And that has a big implication on companies, not just for their overall management, but for their systems, and ultimately for the products that they design and offer to the marketplace in the future. So potentially a major impact on the industry, another few years yet before we see the true impact of that, and then it'll be several years before that plays out.
A long time coming.
Indeed it has been.
Greg Carter, many thanks for your insights.
Thanks, Diana.
For AM Best TV, I'm Diana Dorothy at the 16th Singapore International Reinsurance Conference.